Let's focus in on the economy now by walking through some charts with Pete Forbes, data scientist at Arbor Research. Pete, welcome back to the show. I want to first kind of get your take here on what you think is the most important in terms of addressing kind of our speed of our exit from this period of malaise into something better. Right now, it seems the conversation I have with a lot of our guests is about short-term problems, but this long-term optimism. What to you is going to decide how quickly we move from one side to the other?
Good morning, Oliver. It's great to see you again. Thanks for having me on. And yes, I think that's exactly the challenge that investors have right now, is that we know things are going to be difficult in the near term over the next few months, especially for some of the consumer side of the economy. And so what we're trying to help our clients figure out is what can we rely on to sustain some momentum as we go through that sort of dark winter. And as we look at that, we're really focusing in on the industrial side of the economy. A lot of the manufacturing industries that are looking to rebuild inventories that have been depleted, either by booming consumer goods sales or just by some of the trade frictions that have popped up when we swung from this sudden stop to reopening. And now we're sort of getting the things back in step. So we're really focusing on trying to find those spots of momentum in the global manufacturing economy, and then by extension, trying to find the areas in the U.S. specific industries that have the best looking situation for that sort of stock rebuild over the next few months.
Pete, one of the things to look at here is how people react to the virus, right? And it's, I think, puzzled many and shocked, maybe rather is the better word, that we've seen so much stability in some of this data in terms of travel, TSA numbers, despite the vaccine climbing. I know some other data did roll over a little bit, and I want to get to that. But first, let's go to your COVID search topics right now. It seems like it's basically a battle between vaccine and hospitals, which I guess is really a great way to summarize what's happening right now.
Yeah, that's it. That's the communication challenge for policymakers on the delivery side, and for investors when they're listening, is how to manage this optimism about, we know the vaccine is coming. We're going to have multiple effective vaccines that look like they're going to be safe. We're starting to get firm timetables about when they're going to be available. But now we have officials that are going to need to start managing some significant pressure on healthcare systems, trying to get people to stay home. It's interesting. We were tracking mobility data as we went through the week after Thanksgiving, and what looked like mobility was pretty much rolling over pretty consistently across the U.S. has really been erased, and people are mostly back to the way they were living their lives in early November. So it's possible that public officials are going to need to lean a little harder on some of the messaging, emphasizing especially some of the stress on healthcare. And that's the pivot point where we start to think people might pay a little more attention, potentially reduce some of their activities outside the home. And that's why we're looking toward potentially other sides of the economy where we have not necessarily a more exciting, but possibly a more reliable stream of economic activity coming down.
In terms of the odds or characteristics of a double dip type of recessionary event or pullback in the economy, another big debate right now is if we've had that or if we're going to. The employment situation on Friday was weird, judging by the market's reaction. Hard to know if it was better than a bad whisper number or if it was just bad. Our jobless claims improved a little bit after a couple weeks of weakness. So the point is, it's gotten a little bit more muddled lately, as opposed to kind of clear, just smashing through expectations. But there's a chart that you've got that looks at global industrial search activity. And to me, it kind of looks like we've gone through a little bit of a dip here, where we had this big rally forward and the recovery, and you saw people searching for industrial terms. It looks like Europe is leading in front right now, but it does look like we kind of had this dip here again that now we're coming out of.
Absolutely true. And so what we're trying to follow and measure with these industrial searches is really just the exhaust of people in these industries going about their daily duties. And so we get a sense of near real time, what activity levels are we seeing? And what's encouraging is that we're, after a series of blows that the global economy took in November with the second wave in Europe and the US and other countries, a lot of uncertainty about the US election that really weighed on consumers and businesses planning. We're seeing that start to resolve pretty quickly. And what's especially encouraging is the consistency with which we're seeing a lot of different categories on the industrial side turn higher together. And that type of consistency is what really gives us confidence that we're seeing more than just a one-off shift in activity, but a concerted acceleration.
It's interesting, the U.S. to some degree has kind of been a little bit less volatile than some of the other recovery stories, but we also see right now that ex-U.S. story, is it becoming more compelling, Pete? Because I've seen a lot of now notes and strategy and viewpoints talk a little bit more about that rotation, not just here, but actually rotating outside the U.S. Do you see that in the speed of some of these search results and activity?
Yes, I think you definitely see an encouraging global landscape. I think over the next several months, you're going to see the economy pulled higher in the U.S. toward a stronger situation in other parts of the country or in other parts of the world. That's especially true in the Eurozone, where they're starting to accelerate out of their own second wave. And this is a different experience than we saw in spring when we were all coming back out of a sudden stop. We haven't really stopped. And a lot of this activity was ongoing and still has substantial momentum. So there's going to be a moving target out there for the U.S. for us to catch up to and keep in touch as we move through the next couple of months.
Okay, so Europe's strong right now, but the point is that overall things are rebounding in a fair amount of unison. We do have that kind of strength emerging. In terms of sectors that are working, you and I have talked a lot about housing, Pete, and the strength of the housing market. It seems like it still is strong, but I also see a chart that says industrials are kind of moving a little bit faster than home construction lately, where that kind of industrial stability shows up a little bit more in terms of reward versus risk. I think this is a really interesting chart with home construction slipping a little bit. What's going on here? Is that about rates? Is it just about a momentum trade slowing?
I think it's the latter. I think the extraordinary conditions for home builders has really become more of a known quantity for investors. And so I think that story's become a little less compelling. I do think it is still an interesting play on the industries that are feeding into that home construction. These are industries that have low inventories and a strong pipeline to look forward to. They will be planning for that and hopefully taking advantage of a strong pricing environment. But yeah, I think it's very much, the latter, where we're trying to see the next move. And I think there are more interesting plays away from what's become the known quantity of home construction.
So how does this this gap that's emerged a little bit, how does it continue? I mean, do you view the housing market as something where the kind of best tailwind is behind it? I imagine that industrials would respond to rates if we keep moving higher in rates, which can have some negative effect on housing. The home builders have been dragging recently, despite the fact that copper keeps running. So it seems like if you listen to that too, that there's something going on here where there's a recovery, but it's bending a little bit more kind of industrial and manufacturing now over the last several weeks.
Yeah, and I think the home builders have made a conscious choice to not take too much risk. They've been conservative with their balance sheets and how they're planning to spend in an environment where they certainly have the pipeline to make a lot of new homes quickly. And they've been conservative about that. And so the market sort of adjusted to that lower expected growth path. But we have other industries where, they have a little more running room and hopefully some catch up to do with the global economy pulling them in the right direction. Certainly metals is one of those categories that we have in the U.S. where we're seeing a little bit of a dip here in November, but looking abroad to significant strength elsewhere. And that's both a precious metal story and an industrials metals story. I don't think, given the inflation outlook and the demand for alternative safe assets, the precious metal story is really going to go away. There's a lot of talk, and I've expected this over the past year a couple times, to see sort of that rotation from industrial metal toward industrial metals, away from the precious metals as a safe asset alternative. And that hasn't really come to bear, and I'm not convinced that it will, but we may have sort of that coordinated strength where you see demand across the metals industry from base metals all the way up to finished metals goods. And I think that's another sweet spot where we're looking at depleted inventory levels and new order levels that are rising pretty quickly.
Pete, the last point here on thinking about the kind of sweet spot to be in. You mentioned the metals, the mining components. It seems like that might be a place where you can kind of get a little exposure to both. I mean, we saw that pre-vaccines, gold was the trade, right? And some of these mining, it depends on how you invest in it, but you can get an ETF that has both gold miners and copper miners in them. Some of the miners themselves have exposure to both, where you've got this industrial side if they're mining copper, or if if you've got a precious metal miner, then it works in an environment that slows down. I mean, is this kind of like a hybrid play that gets you a little bit of both?
It definitely can be, and it's a global industry where a lot of the biggest players are pretty diversified. So it's an interesting play where you can sort of have both sides of the coin with the precious and industrial exposure. And it may, although I definitely see copper referenced as one of the crowded trades out there. I think if you look at the broader than just the single, sort of Dr. Copper market that gets a lot of attention, there's robust demand, down to more finished goods. So I think that it's more than just a one-off story here of sort of this industrial economy on a global scale really reigniting and sustaining some momentum.
Okay, seems a lot more of a tick up in the metals and mining from your team's search interest results and analysis you do than what we see in oil and gas or even some of the manufacturing pickup. So it's certainly an interesting area to keep our eyes on here, Pete. Thanks for the walkthrough here on the economy as we continue to try and assess how quickly things are coming together to the upside. Pete Forbes, data scientist at Arbor Research. Good stuff as always.